All right, so if you look at this market now, this is a volatility 101x that we are trading. You see, this is 4 hours time frame. So each candle on this place, on this chart right now, is actually a product of 4 hours each. So now let me show you something. Look at this line here. This line here is our entry. So we actually entered when this market hit that line. We enter when it hit this line, and see all the 4 hours. So all the candles that has come down here is the accumulation of the 4 hours that we have used. That's if we count from here 1 2 3 4 5 6 7 8 9 10 11 12 13 14 15. So about 4 hours times 15 is the period we've spent in this market. And like I was telling you, hopefully we'll be able to break this resistance. If you're able to break this resistance, then the market is gonna go down, because if you look at the chart, you can see that. Look, let me bring my arrow here. You can see that the market hit the line here. It bounces down. It came up here and hit the line here. So it tell you the structure, that the structure is a cell, right? So you see that it hit the line there. Yeah, it hit the line here, then it bounces all the way down here, right? Then it came back and hit this line, then we entered, because it's a trending downward. So immediately came here. So we have other things that show us, that have already informed us that once it hit this place, it's gonna go down, right? So it started coming down. So that is, so you can see now. So automatically now, all things being equal, based on what has happened before, then we expect this market, as it hit here, we expect not to now go below this to create a new low, right? So that is the whole idea. So that's why I said that hopefully we are expecting it to cut this line, this resistance. Once you cut this resistance, then start going further down. This is 4 hours. Let me go to daily for you to see what's happening daily. All right, so this is daily. Yeah, this is daily. So we're expecting this market to break this and break this, then go down. So now what is the other thing we use to enter this market? Let me increase this. So now if you look at this, you will see a box here. You will see a box. So what are we trading? We are actually trading what we call fair value gap. So we are using aside the trend line that I drew, we are using what we call fair value gap. So what is fair value gap? Fair value gap is when there is a jump, in market, when there is imbalance in market. And where is imbalance created here? Let me show you an imbalance that is created on this market here. Let me show you. So if you look at this market, look at this red candle, the last candle that hit this line. You see the candle closed, it reached this point, but it closed here. So when this candle closed, another one opened. So when this candle opened, it traded heavily and jumped. It had a very long jump and closed here, right? So when it closed, another one opened. So this one that opened traded down to create a balance, right? So it traded down and reached this point, but it did not reach this one, the last candle before this long one. It did not reach it. So it stopped here, then closed here. So since there is this vacuum between this the tail of this candle and the tail and the head of this candle, now with this long candle, there is a vacuum, because these two candles are supposed to kiss each other, from the two sides of this long candle. That would have been a balanced market. So because there is an open, we call it fair value gap. So there is this imbalance. That's why I put this box here. So the box I put here is to say that when this box is filled, then the market will return to sell. So that was exactly what you see, that the market came. You see these green candles, this green candle drop, another one drop. That is a journey of 2 days. Then it filled this box. Immediately you fill it at this point, that was where we drop our market. You see? So that's why I told you that, that was where we drop our market. And sometimes when you drop like that, the market can extend to this place just to take market to liquidate people who have already entered the market, to liquidate them. So when the market comes in here and you don't have enough money, you will lose your money. So when the market drop and the market bounce back, was about to bounce back, then we drop. Sometimes people don't even drop at this point. They normally drop after it has come out of the box. But I feel that it's safer for us to drop it here so that even if he wants to continue going on buy, we lose, minimum money and come out of the trade. So that's why I told you that no trade is at 100% assurance. So, but fortunately for us, it obey all the rule. I told you that day when I was going to enter that we have fulfilled all righteousness regarding this market. We are going to enter. So we enter. So now in the last 3 days, see this red candle is the first day, second day. Now the third day candle is forming. So our hope is that this third day candle now will go down, right? So we can be able to have a good cash out.